Yes, brilliant. Okay, right, let's get started. So just to let you guys know, of course, brilliant. Thank you, Rahul, for confirming. Just to let you guys know, as we go through this session, if you've never joined our sessions before, just to give you a little bit of an overview, that these sessions are here for you. So if you have questions, or if I'm saying something that doesn't make sense, by all means, type in the chat box and say, can you explain that again? Or can you move on to a different currency pair? Can you look at this time frame, that time frame? These are here for you. So dictate it as much as you need to. So the disclaimers are up here on the top left hand corner, so please do read them. Gives you an idea of what you can expect from these kind of sessions. In general, what the structure will be is that we will go through trades that we put on last time. There were 3 trades that we put on last time. See what happened to them so that we can understand how we might have managed those trades. So it gives you an idea of how to manage trades moving forwards. And then we'll come and look at some new opportunities following our methodology, following our scans. But again, if you say, can you look at the Euro Canadian on a 2-minute chart? Great, we'll do that. So I'll be followed by you, but otherwise we'll look at some structured examples. Okay, so just to let you know and point down here about the different support that you can have. That's weird. Normally I have a thing that I can point with. I can't point today, but down here you've got my email address, which is Becky at, oh, there you go, Becky@tradictive.com. There's also support@tradictive.com. So you can use those if you need, if you have questions after the fact. Okay, so let's come and have a look at some trades that we placed last time. So let's put the Euro US dollar first. That was the first one that we put on last time. So this one, as you can see, so this was a 144 minute on the right hand side, according to my notes, and a weekly on the left. As you can see, so we placed this, it was towards the end of March, I think it was the 20 something of March. So we placed it and we got triggered, and we got triggered at a time when actually we should have cancelled the trade. And let me explain why. So even though this trade came very close to being stopped out, it didn't. It would have ended up being a profitable trade. We would have actually cancelled it. And the reason for that, if I make this bigger, the reason for that is because by the time price triggered into our zone, which was there, our EMA price was no longer lining up, which is there. So essentially, you make this bigger, the only reason, or one of the reasons that we get into a trade, is if our EMA number, which is represented here by the blue line, lines up between our entry and stop. And our entry and stop there is shown by the black and red lines. So we would have cancelled this trade because it no longer lined up with what was probable according to our methodology. Now, in the end, of course, this trade happened to do very, very well. In fact, it was 0.1 of a pip away from being stopped out, and then would have gone on to be profitable. Now, depending on the spread at the time, you may have been stopped out. You may have actually lost this trade. You may have left it on and luckily been profitable from it. If you'd been managing it, you would have actually cancelled it. So then we had Bitcoin that we looked at. I think it was Coinbase. Yeah, it was Coinbase. Let's take a look at that. So with this one, we triggered into the trade. So I think it was a daily chart on the left-hand side where we put the trade on. Great, and I believe it was a 55 on the right. So here we triggered into the trade. Everything was lining up because we had, on that day, we had our EMA lining up with our entry and stop. We had a thick blue dot there, so probability upwards. Everything was going in our favor. So the day that we triggered in, let's come back over here, back to where we triggered. Again, this one came very close to stopping us out, but didn't. It came within, I think, a few $100 worth, but then moved up from here, hit our first target, and then hit our second target within a few days. So this one would have been a profitable trade, and quite a nicely profitable trade as well. So happy days, that's good so far. See here from Rahul, can only see the first screen. When you say the first screen, do you mean the PowerPoint slide, or do you mean the what they call the charts? Can you see the charts? Can you see the disclaimer one? Okay, let me unshare and then share again. And let me show you. Share screen. Okay, so hopefully now you can see. Yes, okay, brilliant. Sorry about that, guys. I didn't realize that you couldn't see what I was looking at. Okay, so this is what we were looking at. Let me just explain it again. We were looking at Bitcoin, the trade that we put on last time, trade that we put on before with the euro dollar, rather than show you again, because that will take more time out from looking for new trades. That was a trade we would have cancelled. This one, we would have got into the trade, and we would have got into the trade at this point, where it hit the black line, it then hit this green line, hitting our first target, and then in time hit the second green line, which was our second target. It's a very decent reward to risk ratio. Happy with that trade. Now, the last trade that we put on last time, let's just bring that up on my notes, was the Euro Canadian. So let's see what happened there. Let me know, by the way, if the screen freezes again, or if you're not seeing anything change, just let me know, and I'll keep my eye on the chat box. So this here was another trade that went in our favor. And just to say, of course, we put 3 trades on last time. One of them would have been cancelled, but if you'd have left it, it would be profitable. And then the other 2 have been profitable by quite a decent amount. That's obviously not what happens all of the time. You might have trades that lose, a couple in a week, or a couple in a row, a few in a row. You might have some that win a few in a row. It's just kind of how it goes. As long as overall you're profitable, doesn't really matter. Okay, so with the Euro Canadian, we entered into the trade at this point, which depending on, so when price was up here, then the EMA was also likely within these 2 areas. So we probably were in this trade, that once price moved back down again, the EMA would have moved back out again. But I'm pretty confident at the time of entry, we would have had everything lining up. We had a thick red dot, so probability down, and therefore got triggered into the trade. Price then moved in our favor, hit our first target a few days later. And then by this point, which was a week or so later, we would have then closed out the trade on that day because we lost probability at this point. Doesn't mean it's not going to go down. It just means it's less probable to go down. We don't want to be trading where we don't have probabilities, which means we manage our trades as well, depending on probabilities. So if we're already in a trade here to the downside, and it starts to move against us and loses probability that it continues down, we would have closed out of the trade at that point. So overall, the trade would have been a 1.5 to 1, 1 and a bit to 1. So a slight profit there with the Euro Canadian. Okay, so let's go and look at the FX Street economic calendar to help us figure out what we should be looking at today, or more, maybe what we should avoid to be looking at today. So today is Wednesday, April the 13th. We have some news throughout the day that could affect the Canadian markets, the Canadian dollar, and again, some specific news at 3:15 that may affect the Canadian dollar. So I'm not saying let's avoid the Canadian dollar, but if we have other choices, let's choose them instead of the Canadian dollar. And then we can see that early in the morning, my time, early hours of tomorrow morning, we have some news coming out that could affect the Australian dollar. Then news throughout the day tomorrow that could affect the euro and the US dollar, and again, the Australian dollar by next week. So again, it's not to say we avoid these, but maybe we try and focus more on pound New Zealand, Swiss, yen, currencies and currency pairs that don't necessarily have news coming out soon that could affect them a lot. Again, not to say we avoid it entirely, but just to be aware of it. Okay, so coming back to TradeStation, and again, let me know if I'm switching between screens here and you can't see that I'm switching between screens, let me know, but we should be looking at TradeStation now. Now, this is a scan that we simply use to help us be more specific as to which trade opportunities we look at. It's not to say that we will place these trades, it's just to say that it's more worth our time to look at them. So what we're doing is we want to look for where we have yellow boxes, because they show us where we have near opportunities. And we want to look for ones that have either thick red boxes there or blue boxes. So we're going to start with our daily climates. just because I prefer to use bigger timeframes in Forex if we can. So we'll start by looking at the Euro Canadian, and then we'll look at the Pound Swiss. So Euro Canadian first. In fact, let's look at the Pound Swiss first, considering what we just spoke about with avoiding or trying to avoid trades that might be impacted by news. Let's start with the Pound Swiss. So we'll come here, we'll go back here, and we'll look at the Pound Swiss. So I'm choosing Oanda data. Of course, you guys need to make sure that you are using data that is relevant to the brokers that you're using. There's no point you using Oanda data in order to place a trade if you're using a broker that's not Oanda, and therefore perhaps the pips are different, the probabilities are slightly different. So be aware of that. So we have a daily chart on our left-hand side, 55-minute chart on the right-hand side. So these are the timeframes that we're using. What I'll also do, if we can't find an opportunity here, which by the way looks like we do have an opportunity here, so we will take this. But what I'll do is, in other examples, switch through timeframes and see if we do have better probabilities on other timeframes. But for now, we actually see what we want to see here. So let me explain very quickly, because it looks like we might end up going in at market here. We have a thick red dot, which to us, using auto climate, which is what this app is, simply tells us probability is down. Thick red dot, probability down. Brilliant. Our EMA number is 1.2165, which is literally where we see sellers starting on the right-hand side. So what we have is probability down combined with sellers that will come in at the EMA, combined with sellers that will come in at these UFOs. So sellers, sellers, and sellers. Therefore, more probability that the markets go down, which is why we would also want to be selling. Now, the one thing that might get in our way here, and we'll have a look, this way, is that, and I think, oh no, I think we'll be okay. So what I was going to say is that we've got a lot of UFOs back to back. So we've got a lot of UFOs one after the other. So we would combine all of them. We don't want to be being stocked out in amongst sellers, because those sellers could also be pushing price down. So what we want to do, what we want to make sure that we do, is encompass this whole area. So let me put in here. So the entry price is going to be 2.2165, which is exactly where those sellers start and pretty much exactly where our EMA is. And our stop loss is going to be based on this top number here. So that's 1.22556. We're going to round it up to the closest pip, add a couple of pips for the spread, and then add 5 pips for wiggle room. So that's going to be our area. And providing, and I think we do visually, providing that we have space to take this to our, what would be our final target, which is down here, and we do, then we will place the trade. So our entry is the black line, our stop is the red line. We will place 2 different targets. Our final target is going to be where this UFO is. This UFO stands for unfilled orders, shows us where buyers are. So if we're selling in the context of sellers with sellers and sellers, the only thing that can stop sellers is lots of buyers. So we don't know if new buyers are going to come into the market, but based on what we see right now, we have buyers between these prices, 1.2058 to 1.1968. So those are where we have the closest buyers. So we want to get out before those buyers can change anything. So we're going to take that top number, which is 1.20581, round it up to the closest pip, and then add a couple of pips for the spread. So that's going to be our final target. Our first target is always 1-to-1 away. It's a mechanical 1-to-1 target. So let's put these numbers in and we can figure out what that number would be. So 1.2165 for our entry, 1.2263 for our stop loss, and it is a wide zone. That's 100 pips, almost 98 pips, so be aware. I put $50 of risk on each half of the trade. You don't have to, you put whatever risk you want, but of course we want to make sure that we are risking what is comfortable and what fits our trade plan. So target 1 is a couple of pips, 5 pips above target 2, but it is above target 2, so I'm happy there to place it. All that means is that overall it's not going to be a very good reward to risk ratio. It's enough based on the rules that we have. So we'll place it. Obviously, in an ideal world, our targets would be very, very far away, and we would be able to take all of it out, everything out of these markets. Like, for example, the Bitcoin trade, where we had, just to show you again. So on this Bitcoin trade, we got in down here, and I mean, actually, we took profit at this point. We could have taken it all the way up here in theory, if you'd have trailed your stop, perhaps. But it's a very decent, you know, if that's your risk and that's your reward, it's a very good reward to risk ratio. Whereas here, that's the risk and that's your reward. It's not, you know, it's obviously not as great, but still fits the rules, so we'll still place the trade. So that is the first trade of the day, which is the pound Swiss. And we did a good job there because we avoided the, oh, it was Rwanda, wasn't it? We avoided the markets that have news coming out that could affect them, that we know of. We looked at the first trade on a daily chart. We looked at the first time frame on the 55-minute, and we found ourselves a decent trade. Just going to put a little note here. So placed on the 12th of April, extra 1 day and 55 minutes. I do that and I draw it on the chart as well as keep a note for myself, because it's just much easier to see what's going on visually, of course, if we have it all on the chart then. Okay, so that is trade number one. Let's now come and see what our trade number two might be. So we looked at the pound Swiss. We've got the euro Canadian there, but as we've got Canadian and euro news coming out in the next couple of days, let's maybe look at another opportunity. Doesn't look like we have any other opportunities here. Let me just pause and explain why. The ones that are near sensible, so you notice some of them say near hopeful, like down here. The ones that are near sensible, the only ones that are near sensible and have thick red boxes are these two, Euro Canadian and pound Swiss. Now we'll have a look at the Euro Canadian. Again, just bear in mind that we might be placing trades on things that might be a little bit more volatile, shall we say, in the next few hours. So that might mean that you reduce the risk that you put on these trades. It might mean that you don't trade them at all. It might mean that you just keep an eye on them and you have a look in the morning before the next lot of news comes out. I'm just squishing this down here to see where our closest buyers are. It doesn't look like we have any on the Euro Canadian, which is interesting. Okay, so we have thick red dot, probability down. We have our EMA at 1.3722. That's where we're likely to find sellers in this context of a market. When I say this context of a market, I mean where current price is below the EMA. Current price is below the EMA and then moves up to touch it, more than likely people sell. If price was above the EMA and then moved down to touch it, then people would likely buy. So in this case, excuse that if you heard that sound, that was TradeStation being very noisy there. So in this case, where price is below the EMA, we're likely to find sellers at this point, which is 1.3722, which is about here. Now, ideally what we want is we'd want to have sellers here to be able to take advantage of this. We don't see any sellers here on this time frame. Funnily enough, I would think, based on the structure of this, we probably had sellers at this point before price came in and took out those sellers, which it did. So we maybe missed an opportunity here, perhaps earlier on in the day. This might have been a good opportunity to take. On this time frame, we don't see any sellers. I'm going to have a look at the 60-minute chart and the 120. And then I'll take another look at the 30, just looking at different time frames here. Still don't see sellers in that area, so no trade to be taken here. Just to pause on this example, some of you might be saying, hold on, you're flitting between time frames. Why are you flitting between time frames? Especially since a lot of what we do is saying, if you are this style trader, then you use these time frames. The reason for that is because, yes, especially when you start, you want to be much more consistent in the timeframes that you're using, and it's easier to understand what's going on. As you trade a little bit more and we understand the reasons why we use the time frame on the left and the time frame on the right, kind of makes sense to be a little bit more flexible with our entry and stop time frame. So just to quickly explain this, the left-hand side, our bigger time frame, is the one that really shows our style. So this is a daily chart, which means we expect our trades to last, we're swing traders. So we expect our trades to last a few days, maybe a few weeks. Maybe within a day if there's a lot of volatility, but it's definitely not day trading. It's definitely not being in and out within, 30 seconds or 30 minutes. We expect our trades to last a little bit longer. So this one needs to remain consistent with our style of trading. On the left-hand side, that's what we're using to have a look at auto climate to see whether we should be buying or selling or doing nothing. For us, we use auto climate to help us answer that question. Thick red dot, probability down, sell. Thick blue dot, probability up, buy. Thin dot of either color, not enough probability, do nothing. So it's answering those questions for us. On the time frame that we are using to represent our style, do we buy or sell or do nothing? We also use it to figure out where we might have larger amounts of buyers and sellers come in from our EMA. So if we've got those two things checked, all we use the right-hand side for is to be more specific as to where exactly we're going to buy and sell based on where we find further evidence of buyers and sellers. So if we were to have, so I'm just going to draw where that EMA would be. So if we have an EMA here, if we were to have sellers at this point as well, let's say like this, if we were to have sellers, so it would look, I guess like this. If we were to have sellers there as well, then what we would have is on this time frame, we would have evidence that we have more sellers where we expected sellers to be in the context of a greater move to the downside. So it checks all those boxes. But all the right-hand side is doing is showing us where those sellers are so that we can say, okay, this is our entry price and our stop loss price is this plus a little bit. Give us some wiggle room. So if all the right-hand side is helping us to be more specific and finding more evidence of sellers, it doesn't have to be the same time frame every time. It just needs to be smaller than the one on the left because we're using it to be more specific. Saying that, you don't want to use a daily chart here and a 2-minute chart there. They're too far away from each other, less relevant. So you might look at 2, 3, 4 time frames within a range. So I looked at the 30-minute, the 55-minute, because that's a Fibonacci number there that we use. I looked at the 60-minute, again, very close time frame, and then the 120. So they're between 30 minutes and 2 hours. So within a close enough range to each other, not going higher than this, not going lower than 30 minutes, still relatively relevant to what the daily chart is doing. So hopefully that makes sense as to why you might cycle through different timeframes. Just to pause there. So let's now move on and see if we can find a new opportunity. So again, nothing here. On smaller timeframes, we do have some other opportunities. So again, we've got the Euro Canadian, but we're going to try and avoid that for now, and we'll look at the pound yen on a 240-minute chart. So pound yen, again, we'll look at Oanda data. 240-minute on the left, which means on the right, we may have a 21-minute chart. So if you're looking at a 4-hour chart or a 240-minute on the left-hand side, you're a longer-term day trader to a shorter-term swing trader. Your trades might last more than a day, or they might last, a good few hours, unlikely to be minutes in this case. So we have, let's have a look. We do have an opportunity here, so great, let's put this one on. We have a thick blue dot on our bigger time frame, probability there to the upside. We have an EMA price of 163.39. Current price is above that EMA price, which means we expect buyers to be at the EMA or to come in at the EMA. So 163.39 falls very nicely just inside this UFO, which are between these prices, 163.398 to 163.303. So we've got our checkboxes checked, we've got room to take this to the upside, and therefore we'll place this trade. No need to be looking at different timeframes here. So let's use this area. There we go. So our entry price, we're going to take this higher number, which is 163.398. We'll round it up to its closest pip, which is 163.40. Then we're going to add a couple of pips for the spread there. So 163.42. Our stop loss, let's come back here. Our stop loss, we're going to take this bottom number, which is 163.303. We'll round it down to 163.3. And then we're going to take off 5 pips for wiggle room. So black line is our entry, red line is our stop. We can see here, price has already come in and reacted to this and gone to the upside. The buyers are still there, so we will still place this trade. Now, in terms of where we take our final target, what we would usually do is look for red UFOs, so that maybe look like that-ish. She says, trying to draw it, but it's not really quite working. So we might look for red UFOs on our bigger time frame. So we're looking for sellers that can stop the buyers, but we don't see any. That means our second target in this case is going to be a trailing stop. So entry of 163.42, stop loss of 163.25. Risk again, I'm going to put $50. You guys do what you want. Our first target is always 1 to 1 away. So in this case, our target one is going to be 163.59. Very close there in my drawing off the cuff there. So that's going to be our first target. So we'll put that in. Our second target, because we don't have anything to show us where the sellers are, we're simply going to put in the same entry, so 163.42, the same stop loss, 163.25, the same risk, and we're just not going to check take profit. And we'll just click buy. So we've got the same risk there going on, but we've got no predefined target for the second half of the trade because we have nowhere objective that we can see to take it. So instead what we'll do is, let's say price comes in, hits our entry, moves away, hits our first target, moves away, and then creates a new UFO. So we see, oh, it's not working for some reason, but assume there's a circle there. There you go. We see a new UFO form. What we'll do is we'll take our stop loss from here and we'll put it just underneath that UFO. And price moves away again, and a new UFO is formed. There you go. And we'll take our stop loss from here and we'll move it here. So we're locking in profits by trailing our stop behind objective places where buyers are, which is what UFOs are. They show us where buyers are. That's not to say, by the way, that just because a UFO is there and therefore buyers are there, that these UFOs always, quote, work to push price up or down by a huge amount, but it's using something objective and statistical to give us a place where we're going to trail our stop, rather than based on when we fancy it or by how much we want or by how much we want to take out of the trade. It's very objective and it's based on a methodology that follows a process. So that's what we'll do. Now, of course, if price just comes straight through, maybe new sellers add to the market and price just comes straight through, then fine, we lose what we were going to lose anyway. We don't hit our first target. We don't take any trailing stop. We lose. It may be the price comes in, hits our first target and then comes against us, in which case we made half of the trade. We lost half of the trade. Overall, we break even. Not a big deal there either. So that's our second trade. I'm just going to put a little note here. So placed 12th April, FX Street, and this was a 4 hour and 21 minute. Again, easier to come back and look at if we can see visually what's going on. Okay, so we have another 10 minutes or so. So let's see if we've got some more opportunities to look at. Again, those of you that are with me here live, by all means, type in the chat box the currency pairs you might want me to look at, timeframes you might want me to look at, and I'm happy to be steered by you. Let's have a look here at, we've got an opportunity that's popped up for the dollar yen. So let's have a look here at that in the meantime. Also, you've got from Kashan, so euro. Do you want the euro dollar? Is that what you want me to look at there, Kashan? Euro dollar? Yes, okay, great. What time frames would you like me to look at? So which time frames on the left-hand side would you like me to look at? Daily, weekly, 4 hour, 1 hour? Daily. Okay, great. So we'll stay on the daily on the left-hand side with the euro dollar. This looks like a trade we put on before. So let's have a look at a different set of data. Great. Okay, so euro dollar there. So if we've got the euro dollar on the daily on the left, then we might use, let's go to our 55-minute, which is our normal one of choice, on the right-hand side. Okay, so with the euro dollar, we have a thick red dot probability to the downside. Now we are a little bit overextended to the downside based on what usually happens, and I'll show you that here. It's easier to, I'm not sure if you can see it very well. I'm not sure if it's easier to, there you go. Switch that down. So see these statistics here? You might not be able to read them, but I'll just explain. The first lot, so we've got 3 different sets of statistics. The first lot tell us how many candles that market usually goes up for. So in this case, it says 4.81, rounded up, normally goes up for 5 candles. The second lot tells us how long that market usually goes down for. So in this case, again, rounded up, 5 candles. And the third lot of data shows us how far that market has been moving in its current direction. So basically, if we just ignore the first bit here, usually the market goes down for 5 candles, and we're currently on candle number 8 to the downside. So what that shows us is that we can still get into this trade if there is one to take, but we are slightly overextended. We lack as many probabilities as we'd like. Not to say you don't take it, it's just to say be aware of the fact that if we're overextended to the downside, we have less probability that it continues down than if we'd just started a move to the downside, if that makes sense. So something to bear in mind, but not necessarily something to stop the trade. We still have a thick red dot, which is probability downwards, which is great. Now we do have the EMA quite far above us relatively, I guess. So the EMA is at 1.0893, which is here, round about there. Whereas current price is all the way down here. Now again, that's not necessarily a problem. The further away that the EMA is from current price, the more it can change by the time price gets there. Again, if that makes sense. So let's depict the EMA with a different color. So let's say the EMA is this line here and price is here. As price moves up, so too will the EMA. So depending on how price moves, how quickly it moves, depends on whether or not that EMA shoots up a lot, whether it goes up really slowly. But because there's more space between us and the EMA, current price and the EMA, we have less predictability over how it will move. But again, not necessarily a big deal, just something to be aware of. Now, the biggest deal is, do we have red UFOs on the right-hand side that coincide with that EMA price? We currently don't, so it's 1.0893. So what's that? Here. I would argue, and again, talking about how the EMA moves, if current price is here and the EMA is here, as current price moves up, the EMA has got to move up, if it does move up, right? So if current price moves up all the way to this UFO, chances are the EMA is also going to move up into that UFO, because the EMA will move slower than price, because it's always lagging, right? So I would say, based on how the EMA moves versus price, this UFO that we have right here is actually a reasonably likely area. So let's put this on. Let's put this trade on. So far though, Kashan, and I know obviously it was your idea to look at Euro and the timeframes. Is this making sense so far? Do you have any other areas you want to look at or any questions or anything? Just let me know. So whilst you do that, I'll just explain the entry. So the entry, we're going to use this bottom number, which is 1.09065. We're going to round it down to the closest pip. And the stop loss, oh, whoops, that was the wrong number that I did that. So the stop loss will actually be 1.09331, round up to the closest pip, which is 1.0934. Add a couple of pips for the spread, and then add 5 pips for wiggle room. That's where that is. And our entry, as we said. So that's our entry and stop. Watching and learning. Okay, great. Let me know, Kashan, if there's anything else you want me to explain, or if I'm going too fast or too slow. Okay, so that's our entry and stop. And again, as we can see, at the moment, the EMA is outside of that. At the moment, it's not lining up. But bear in mind, as price moves up, if it moves up, of course, the EMA will move with it. So if price were to move up into this area, you know, within the next few days, it's likely that the EMA will meet it there, which is great. So it's still going to line up. Our first target is always going to be 1 to 108. In this case, we also see we don't have, on this left-hand side, we don't have green UFOs. We don't see that we have these green UFOs that show us where we have buyers here, which is obviously what we normally want to see. We don't see that. So we're going to do the same as we did with the last trade and have a trailing stop. So entry is 1.0906. Stop loss is 1.0941. Risk, whatever you want it to be. I use $50 because then $50 on one half of the trade, $50 on the other, $100 risk. It's a nice round number. Just for example's sake, you guys obviously want to risk whatever you want to risk. Our first target is going to be 1.0871. So again, really like using Trading View for this because it helps you with the maths. You don't have to work it out or put it in a spreadsheet. It does it for you. So that one goes in there. And then we're going to have the same entry, same stop loss, same risk, and we're just not going to take profit. So in this case, let's say price moves up, EMA moves up, and we get triggered into the trade here. Price goes in our favor. Let's say that price goes in our favor. And then a new UFO is formed. In this case, it would be a red UFO. So we take our stop loss from here and we move it down to behind here and so on. That's what we'll do in this trade. Now, this trade is a decent trade. It fits all of the criteria. However, just to be aware of a few things where we might cancel this trade before it happens. Great, I've just seen that note there. We'll wrap up. As soon as I've explained this, we'll have a wrap up. So this trade might be a trade that we end up cancelling more likely than the other ones for a couple of reasons. We're already overextended, as we saw. So we're already further to the downside than we usually would be. So we're already overextended and therefore lack a little bit of probability there. We also have more room for price to move and more room there for the EMA to maybe do something that we're not quite sure what it's going to do. So essentially, if by the time price gets up here, we no longer have a thick red dot, cancel the trade. If by the time price gets up here, the EMA is there or here and it's not quite lining up, then we cancel the trade. So we've got a couple of things in the way that might make us cancel this trade, but it might be that price sort of shoots up over the next couple of days like that. EMA follows it tightly. We get triggered into the trade, still got a thick red dot, happy days, and we follow this to the downside. Just bear in mind, with trades that are further away from the EMA, you'll need to check in on them more often. Okay, so let me just show you a quick place you can go if you have questions. You can, of course, email me, by the way, which is Becky@tradictive.com. So any questions, you can email me. Always happy to help. But you've also got tradewithufos.com/Becky. You can get different apps and platforms from here. There's one-on-one coaching if you like. If you scroll down, you'll notice basically a frequently asked questions section. So you might find answers to your questions here, or you can log in for free and ask them there yourselves. So different places you can go for support depending on what you need. But hopefully that made sense today. Next time that we're here, we'll go through those trades that we placed. Did we cancel them? Did we win? Did we lose? Why would we have done any of those things? And then we'll place new trades next time. Okay. Thanks, Ray. Nice to see you as always. And thanks, Kashan, as well for suggesting things and for you guys chatting in the chat box with me today. I will see you next time. Take care.